Have we reached the point of too much tax on property investments? When the most recent budget was announced, it all became clear that there would be no relief from higher rates of stamp duty for institutional investors. Many are seeing this as the pivotal moment that investment property is indeed being taxed too much. I'd just like to take you back to 2015, the autumn statement that higher rates of stamp duty would only apply to the purchase of residential property after the 1st of April 2016, so long as the purchase was made by an individual who owns more than one property. Since we have just had 2016's budget, it is now revealed that the previous criteria for the higher rates of stamp duty have been amended to also apply to non-individual purchasers purchasing residential property. This means purchases made by companies and institutions are now going to pay the higher rate of stamp duty. It is said that before the budget was announced, there were talks between government and the industry in order to create a scenario whereby those considering substantial investments in residential property would find themselves to be exempt. Suggestions were mooted that an acquisition of at least 15 properties would qualify for an exemption of the higher tax bracket. The British Property Federation, among others, lobbied for relief for institutional investors, and it was looking as though the deal would be done. At this stage, it is clear the deal has hit a wall. Such large-scale investments are vital for driving the government's schemes related to the property sector, working to meet the government's targets for constructions of new homes. The following rules apply for those purchasing more than one property, along with an increase in taxation. Number 1. Higher rates of stamp duty for acquisitions by non-natural persons. Number 2. The annual tax on envelope dwellings. Number 3. Non-resident capital gains tax. While the government has chosen not to provide relief for institutional investors, the government certainly recognises that relief should be provided in other ways for bulk purchase property investors. At this moment in time, it remains to be seen exactly what the government will do, if anything, to assist with those making property investments. It remains to be seen if the present-day housing crisis has been increased rather than eased. To find out more about investing in UK property, visit the website of FJP Investment, www.fjpinvestment.co.uk.